This week, the USDA raised beef production estimates and cattle prices for 2012. On Tuesday, we talked with Jim Robb before the reports were released. Jim was speaking at the Animal Welfare Conference here on campus about world marketing issues. We started off by asking him what the biggest hurdle to the cattle market would be over the next 6 months.
On the fed cattle side, certainly it's going to be the export markets and domestic demand and kind of the pushback that we're getting from consumers. So as the economy goes is where we can push these meat prices higher.
And one of the things you talked about today specifically about that is that foreign demand. Do people realize how important that is and how important it is to keep that high?
It's grown dramatically in recent years. If we look, for example, just in 2011, in terms of the total value, net value of U.S. beef product exports increased about $1.7 billion in 1 year. That's a huge, and that's the main reason we had record high cattle prices in 2011.
Now this is on the fed cattle side. Other concerns for cattle producers going forward?
On the feeder cattle side, absolutely the key is how big this corn crop is and what happens from Mother Nature. We have market analysts talking about a corn acreage planted this year somewhere between about 92.8 million acres and 94.8 million acres. And the size of this corn crop is absolutely going to be critical to how high feeder cattle and calf prices can go. We've already got cattle feeders, feedlots losing money, and so we've got to get the costs down and the prices up so we can continue to push if we're going to continue to push feeder cattle, calf, and yearling prices higher.
So what do you tell those feed yards who are trying to think about when they want to buy their grain? How do you tell them to look at it?
We think in the short term you have to kind of be participating in this market. We've certainly had some buying opportunities. We think you have to watch this market very closely, but likely when we get reports of acreage planted, let's say something over 94 million acres, prices will drop to the point that there'll be some buying opportunities. But I think it's going to really be a strategy that's based on watching the markets and seeing how this crop develops at the best time to start buying corn.
You said today that U.S. consumers are going to eat less beef per person than any time in history, and one of the things you phrased that was they're eating meals. They're not necessarily eating hamburger, they're not eating steak. Reiterate what that means.
Well, largely in the cattle business, for example, and in the hog business, we think in terms of head. And in the meat industry, we think in terms of pounds of beef being the market driver. But actually, consumers eat meals. And so the meal and how this fits together is really important. For example, we have record high hamburger prices today, and consumers are spreading the hamburger over more consumers at the dinner table. Restaurants are doing much of the same thing. So we are seeing a transition. One way we're getting this per capita consumption to decline, export markets are bidding it away from the U.S. In other words, foreign consumers are outbidding U.S. consumers. But we're also changing our meal plate, our meal design in terms of consuming the red meats especially.
But they're still willing to pay for it, correct?
They're still willing to pay for it, and that's the subtle distinction. So per capita consumption's down, but actually beef demand has been increasing slightly in the U.S. Consumers are eating less, but relatively, they're paying higher prices to do that. And so this is actually very good news. In the past, in times of declining beef demand, consumers have eaten less and wanted to pay less for it. Now they're willing to pay a premium for the beef. Now the question is, that's very much a function on how strong the U.S. economy is if they can continue to do that.
We talked about that 6 months ago when you were on with us out at Goodmanson, and one of the things that was mentioned there, and Doug brought this up, was the drought. And today you mentioned that it was a game changer. Overall, as we stand now from where we were 6 months ago, how did that change the overall impact of the beef industry?
Well, about 25% of the U.S. beef cow herd were in the drought zone. Certainly did reduce the size of the herd. It certainly has put pressure on cattle feeders and packers because we've tightened supplies. And so it has had an impact. Now today we're seeing some subsiding of the drought in the southern plains, but an emerging drought in some of the western states. So Mother Nature is still a factor out there, especially on the fundamental producer side of this cattle industry.